My major concern here is the chart. The chart to me is actually coming into significant resistance. You can see here it's had multiple up days in a row, about 7 up days in a row. This is the upper range. If you connect this high right here, let me zoom in a little bit there to this high. Notice how the trend line is right above here, and then that's the 200 moving average. So for me, if Bitcoin is really about to break out here, it needs to get over this area. This would be the big area. This is the one you want to follow as a technician. Otherwise, technically you're still stuck in this same sideways channel that we've been in since January. Gareth Soloway, chief market strategist and CFO of InTheMoneyStocks.com, sat down with Stansberry Research to discuss what he saw coming with the Bitcoin price, as Bitcoin currently trades above 47,000 and is up 35 since the Ukraine-Russia conflict began. There is a euphoria and an near-term price action in cryptocurrency, but Gareth Soloway has a different view on it. Soloway doesn't buy into the rally and believes those entering the market now will likely be buying into a bull trap, as he believes Bitcoin will drop to 20k before rallying again. Gareth's short-term call is not because he is overall bearish on Bitcoin. Gareth maintains that he is a trader at heart, but long-term believes the overall price action for Bitcoin is bullish. However, in this instance, Gareth is shorting Bitcoin. Back in 2021, Soloway had previously accurately called the top of 52,000, which was then the neckline of a head and shoulders pattern. Soloway also called for a retrace back to the 30k range, which was a stark contrast to the other pundits who were overly bullish, calling for 100k and even 200k Bitcoin by Q1 of 2022. Soloway believes that the current push in crypto is just a reflection of its correlation to the NASDAQ, but eventually it will retrace. Listen to Gareth's explanation. I know there's a lot of bullish sentiment out there that's a little concerning because everyone's jumping back on the bandwagon, and just like when we were at 68,000, that was the same way it was, and we know what happens. So let's watch and see what happens over the next few days, and I'll tell you this is that basically all of these things like Ray Dalio, Goldman Sachs, even the invasion of Ukraine, which pushed oligarchs to arguably push move into Bitcoin to avoid sanctions, those are all unbelievably bullish things for the longer term. But what concerns me, number one, is the bear flag that you can see in front of you on the chart, and that tells us that there's likely further downside. And the second thing is with the Fed raising rates and arguably talking more and more actively about 50 basis points multiple times this year, you likely will see continued deleveraging in the system. So the NASDAQ, yes, it's at a great bounce. I don't think it lasts, and if the NASDAQ starts to fall and fear comes back, and then you have to say Bitcoin likely will go lower. So again, longer term, those are all positives, and the short term, fear and greed really rule. Right now you're getting a little bit on the greed side, and ultimately I think fear takes over and takes us slower. So right here, this is not the point to be getting, and I would much rather give people, like, if you hold above this 200 moving average for a couple days, I would feel much safer about getting long at that pointer. And just in full fair disclosure, I've been shorting as of yesterday. I've started to inch in on the short side of Bitcoin with my members at VerifiedInvestingCrypto.com, and we will likely add again, and we're doing very small amounts like 2.5 of portfolio, so it's very small at this point, but we're definitely looking for a pullback off the 200 moving average, and then ultimately I do think it breaks to the downside in the next couple months when the NASDAQ and tech sector starts to reverse down to the downside. So if you're looking for the bull case, you need it to get above the 200 moving average, so 48,250, and it's got to hold there for a couple days to secure itself. Otherwise you're right into resistance here. You never want to be the person buying right into resistance. Yeah, so Ethereum, this is an amazing orange trend line right here. You can see it held. It's held the whole way. That's the one you worry about. If it ever breaks to the downside, as long as we're trading above that line, then you could argue that you're staying in this range. You can see we're right into this little trend line here, and the 200 moving averages is right above that. So the same thing applies as what we just discussed on Bitcoin, where you don't want to be buying right into this area. You'd much prefer if it can stay above for a little while. Otherwise, look for a pullback and then buy the pullback. And again, basically this trade setup is a very simple trade setup. Like, let's just say you pull back to this area right here, right around 3,000 would be support. If you buy there, you have upside back to here and your downside is here. Now if you got below this level, this trend line, then you just stop out of the trade. So again, this is a trader's mentality where you understand the level support and resistance. As long as you hold support, you can buy and hold. If you break support, you have to be ready to act, because that would be my fear, is that if that line breaks, then Bitcoin support is breaking and likely you're heading to 20,000 on Bitcoin. If Ethereum breaks, it's probably heading to 1,700 or so. To watch the full interview, check out the link in the description. What do you think of Gareth's prediction here? Leave a comment. Thanks for watching and we'll see you in the next video.